Should you buy a house now or wait until 2023 when interest rates are projected to come down? I'm going to share some strategies on how to truly leverage today's market. As a buyer, you have less competition, sellers are more flexible, and there are workarounds for those interest rates. Let's get started. Hey there, welcome back to my channel. I'm Erica Monroe. I'm a realtor in the Bay Area and I specialize in Solano County. The housing market has really come to a halt with interest rates up near 7%. A lot of buyers exited the market because of lack of affordability, or they just weren't willing to pay 7% in interest. In order to get a good deal today, there's no way around discussing and addressing the interest rates. And there are strategies such as temporarily buying down the rate. A temporary buy down or a 2-1 buy down is actually a really clever way to leverage today's market because sellers are typically more willing to offer some money towards buying down that interest rate or closing costs. So a 2-1 buy down would allow you to pay to buy down the interest rate by 2% the first year you have your mortgage, and then by 1% the second year you have your mortgage. This is a real life example of applying a 2-1 breakdown to today's rate. The first column shows a purchase price of $750,000 at a 6.99% interest rate. If you scroll down to the bottom row, you'll see that your total monthly payment is about $4,600. Well, if we apply that 2% breakdown for the first year, you'll see in that second column, same purchase price, $750,000. Scroll down to the bottom, your monthly payment drops to about $3,900. That's roughly $700 a month in savings. If you had not refinanced in your first year, look at that third column. Again, same purchase price of $750,000. This shows a breakdown at a 1% buy down, so 5.99%. Your monthly payment would be $4,200. So still significant savings from that original 6.99% projection. The idea is that within that 2-year time frame, rates will come down, you'll be able to refinance and lock in a much lower rate for the duration of your mortgage. Fannie Mae just came out stating that they believe interest rates will drop to about 4.5% in the second quarter of 2023. Now you might think, why not just wait until rates come down on their own? But remember what happened over the last 2 years? As soon as interest rates dropped, it became a buyer frenzy. So many more buyers entered the market because housing became more affordable. You could borrow more money at a lower price point. That typically resulted in multiple offer situations, driving up the price point and requiring you as a buyer to have more cash available out of pocket to be competitive. Buying now allows you to use the seller's funds to buy down the rate, and you can still take advantage of the fact that you have a lot less competition, and you'll likely be able to retain all your contingencies, which means that if the home is not in good condition, you may be able to negotiate credits or you'd be able to cancel. If the house does not appraise, you're not guaranteeing that price point. The seller may have to give you some concessions and bring down the price point, or you can cancel, and you'd be able to retain your loan contingency, making sure that you do in fact qualify for these higher rates. If you're a buyer who's torn between asking the seller to lower the price point versus asking them to help buy down the rate, I'd really encourage you to look at buying down the rate. Let's look at a house that's priced at $750,000. If you ask the seller to lower the price by $25,000, your monthly payments not going to vary very much between the $750,000 purchase price and the $725,000 purchase price. However, if you use that $25,000 to help you buy down the rate, your monthly savings is going to be somewhere between $700 and $800, so a significant difference. If you refinance within that first year or so, there may be some lenders who can utilize some leftover credit from your 2-1 buy down and help you refinance free of charge. Definitely worth asking. I'd also encourage you to talk to a few different lenders and find out what kind of incentives they're offering. Some are providing closing cost credit, some are providing points to help you buy down the rate. A combination of lender incentives and seller credit could go a long way in getting you the best possible deal. My last pro tip to really leverage today's market is to use a local realtor. Our market is changing day by day, and every county has been impacted differently by inflation and high interest rates. So an agent out of Alameda County most certainly will not understand the nuances of what's happening in Solano County or specifically in that neighborhood, and vice versa. It's important that you find local representation. You need to be able to lean on them to understand how to write a competitive enough offer without overpaying. You certainly don't want to insult the seller and underbid and potentially have another buyer come out of the woodwork and take the house of your dreams. Thanks so much for watching. If you have specific questions about a neighborhood or what's happening in Solano County, feel free to reach me at ericamonroe.com.